Time for Chartbusters then. We've got our charters standing by. And Kunal, let's start off with the first stock on your radar, Dixon Tech.
Yes, Aman, interesting stock because the stock is showing signs of a lot of pattern breakouts, an inverted head and shoulder pattern breakout, more visible on the daily charts, and how the stock has been consolidating or taking resistance at this major trendline resistance, as you can see, which is closer to 4,700 odd for Dixon Tech. But the more interesting part about this pattern or this overall pattern for Dixon Tech is the spurt of volumes. And as you can see that the spurt of volumes for the stock in the last few months was significantly higher than the volume accumulation for the stock over the last 1.5 to 2 years. And that makes the chart a lot more interesting. So this indicates that the sell-off or the downtrend which had happened for Dixon Tech, that has gotten reversed. There have been 3 block or chunk of volumes which have led into the strong support zone for Dixon Tech. The earlier base was 2,500, where there was a chunk of volumes, then at 3,000, 3,500 mark, and the recent one was closer to 4,500 levels, which means that this 4,500 mark could act as a very strong base or a support for Dixon Tech, and we should be looking at the stock hitting levels of 5,500 to 6,000, which is the 2021 high for Dixon Tech. So interesting chart over the short to medium term, and expecting at least a 20% upside over the next 3 to 6 months.
Right. Okay. Nooresh, what's the chartbuster on your radar?
So that's an interesting long-term chart for East India hotels. If you look at EIH out here, the stock was at 220 odd levels back in 2007, 2008, then in 2018 to 2019. So finally, it has come back to 220 odd levels, which is after almost 15 years. Classical cup and handle formation. We saw a similar formation happen with Indian hotels a couple of years back at 160. The stock since then went up 100%. So out here, this is a very similar condition, good volumes. It would ideally be a target price of 320 in the medium term, accumulated current level with a stop loss at 210.
Right. Okay. Let's talk individual stocks as well. Kunal, what's on your list?
Buy calls. The first one is about Ultratech Cement, the stock which showed good price performance previous week, but then it went to sideways consolidation. So would suggest a buy, expecting a breakout for Ultratech Cement, 8,400 as a target, stop loss at 81.40. And Piramal Enterprise, a stock which I've been bullish on recently, I think has also confirmed a breakout in the swing charts about the 1,055 mark. So keep a stop loss of 1,048 and look out for targets of 1120.
Nooresh, let's find out your top trading calls.
So first is a buy on Indian hotels. The stock available at support or risk reward rate, stop loss at 375, target price of 440 if it continues. Second is a buy on KPR Mills, which has given a good breakout, stop loss at 700, target price of 780.
So, gentlemen, for joining in and taking us through those top chartbuster ideas.